Welcome back to another stock watch list. My name is Nour Trades, and I'm known for turning $20,000 into a little over $3 million. Today, I'm going to be talking about the hottest stocks for the current week, and also what I'm looking at in the market and what we can, do to prepare for this week. Also, Monday through Friday, I give you guys a market recap, and Saturday, I give you guys an educational video. So, first thing I'm going to talk about is we'll recap what happened on Friday. So Friday, we finished the day at negative 34 points. We were actually positive for most of the day, as you can see. At the end of the day, we just sold off because, we broke support. As you can see right here, there is always patterns and, fundamentals and technicals in the market you can always look at, and it will make your life a lot easier. So the first thing I want to talk about is the support line that it broke at the end of the day. It was just a current day support line plus the end of day sell-off, so there wasn't really much there other than nobody was trying to hold for the weekend. Very simple. But as you can see, it did hold support for the day, which was pretty cool. So other than that, nobody was trying to hold. Nobody was trying to hold over the weekend because we had the G20 summit this week. Also, June 27th, June 28th, or June 28th, June 29th, whatever, because China is ahead of us like 12 hours. But we have the G20 summit. In my eyes, this is the last chance that we have to get a deal with China. If this doesn't go through, I think all hell will break loose. So first thing I'm going to talk about is the current state of the market. As of right now, the market is very bullish, right? The market is bullish and nothing will hold it back. We broke out to new highs. Nothing will bring it down other than this China deal. If this China deal doesn't go through, we will take a major drop down. I will, as soon as I get any news, any negative news about this meeting, I will be buying puts, because when there are new highs in a stock or the stock market, it puts in a very vulnerable state. Reason being is because expectations are high. There's a reason why it's at new highs. Just like how when a soccer player or a baseball player gets picked up to a new team and they paid a lot of money for him, then there's a lot of expectations there. Just like how when a stock market is at its new highs, the expectations are there because you're paying a lot. The stock market is at all-time highs. So first thing, other than that, we do have some earnings that I want to talk about. The first one is Micron. So Micron is a stock that I played with when I first started trading back in like 2016, 2017. And it's actually a really cyclical stock, they call it. So as you can see right here, this stock has earnings this week, right? If you create support right here on the 4-hour, right here. All right, so and then let me zoom in for you guys. They have earnings. All right, so Micron is confirmed to report earnings at 4 p.m. on Tuesday, June 25th. The earnings are pretty in the middle. It's not too high, not too low. I think Micron can match it because Micron is a strong company, but it's been on the longest downtrend. So ever since it hit its highs, it hasn't even come close to, getting back to that number. Also, it does not look good on the chart. So if you look at the 4-hour chart, it doesn't look good. Let's look at the 1-year chart together. Excuse me, that was 3 years, but 3 years does not look good. Also, the 1-year chart looks okay. So the first thing I'm going to talk about is there are a notable buying of about 12,540 contracts of the $25 put expiring on Friday, July 19, 2019. So options traders are pricing in a 4.5% move on earnings day. So you do the math, 33 times 0.04 obviously, and then you get how much it's going to move by. So that's what's priced in for Micron right now. You also have FedEx confirmed to report earnings at 4 p.m. Tuesday, June 25th. FedEx is rough, man. Ever since the whole Amazon thing, FedEx is rough. From 259 all the way down to 150. That's a pretty big, low. If you look at let's look at the 1-year chart. Oh shit, my fault. All right, so 1 year. So you do see a double bottom, right? That's the only positive about FedEx right now. The sentiment is pretty terrible. So with FedEx, there is a notable buying of the $175 calls that expired July 19th, 2019. So they're pricing in a 2.7% move for the same day of earnings. So you do the math, 165 times 0.027. Next thing is Nike. I talked about the double bottom. So yeah, that's the only positive right now with FedEx, which is, could mean a lot. Let's talk about Nike. Nike right here, 1 hour chart. 1 year chart looks good. Let's look at the 4 hour chart together. Looks pretty good too. So with Nike, they report Thursday, 4:15 p.m. There's a notable buying of the 9250 calls expiring July 19th. So option traders are pricing in a 2.6% move that same day. So you do the math, $85.60 times 0.026. The next stock I'm looking at after that is Blackberry. Not really a fan of Blackberry, but 4 hour chart does not look good. But there was a notable buying of the $9 call expiring June 28th, 2019. So option buyers are betting on a double bottom. I mean, I wouldn't really call this a double bottom, but option traders are, betting on a reversal in this stock. I don't know if they'll get it. This is something I probably will stay away from, but the only reason this is okay is because contracts are probably cheap. So you look at Blackberry, the stock's $8. So the only reason I'd be looking at this is because contracts are cheap. And that's about it. So there are a few things to look at. If you look at, let me talk about AMD real quick. AMD, it's on an uptrend. It's very strong right here. I'm trying to get a 1 hour. All right, so yeah, look, it does look like it's on a downtrend from last week, but obviously, the whole China thing, you would expect it, but it's still in its channel, right? So the reason it's still okay is because, it's on the uptrend still. If you look at the 4 hour chart, it's still on an uptrend. There's also a double bottom, makes it positive. I like it. AMD does look good. For this Monday, the 31 calls at $1 or less using that uptrend, you can use that as an exit plan. If it breaks it, then, if it breaks this bottom right here, 28.96, then obviously, you can get out the stock. But overall, there is a bullish uptrend. There is a pullback into the support, but other than that, I don't see any negative things other than the G20 summit, of course, because anything could happen. But as of right now, AMD is still holding the uptrend pretty strong. So Netflix is another one. I think it's holding up pretty well right here, and I think it's ready to shoot up here. So I think that it's ready for its next leg. If it breaks out of its 6-month range, I would say that's about it's hard to I would say around 369, 370. You can look at the range it's been. So I would cut it from like right here. So you can see that, it's been on a range. You can look at the bottoms right here. Look at the bottoms. That's a pretty strong support for Netflix here. So what I'm going to say is even if it does break it, there is a chance it comes down, of course. But the support here for Netflix is pretty strong. It usually comes down, then comes back up. It's been stuck in this area. If it does come down here, you can expect it to come back to around, 330, 340 range. But yeah, Netflix is bullish here, but if it doesn't take this next leg up, it will be coming back down. So Lyft, bullish here. It broke out. Obviously, it's an IPO. It was stuck for a little while. But if it can hold that $63 range, and stay above there, then strikes to consider a $65 calls. They're about $265, and the $67.50 calls at $1.65. It is a key that it holds over $62. So if it can't hold over $62, then I would get out. But Qualcomm is the next one, breaking out of this short-term range in the gap. Qualcomm is a different one. You can see the cup, almost a cup and handle here. It's a pretty wide one though. So putting up a nice flag on the daily as well as holding range. Pullback entries to consider are $71.50 to $70. Around the 69.25. The strikes I would consider personally are the $75 calls and the $77.50 calls at 80 cents. But yeah, that's what I'm looking at for the week. I hope you guys enjoyed this video. Last thing I want to talk about is this uptrend. You can see the uptrend here. So obviously it can come back to its support line around $70.35. But yeah, guys, I appreciate you. Make sure you hit that like button and subscribe. I'll see you guys. Peace.